You're welcome to my channel. We are going to be handling the specialized accounts. We have four. We have branch accounts, we have container accounts, then we have hire purchase and royalties. But we are going to first handle royalties accounts. If you are hearing me, you can comment so that I can know, because I'm not sure. Yeah, it's my first time. So if you're hearing me, please comment so that I can know. Can you hear me? Okay, so we are going to start with royalties accounts. Then for here, can you see properly? This is what I'm going to use because I tried out very many things, like I could not get a solution. So I came up with this. Hope it works. So we are going to first do royalties accounts. And what you should know about royalty, like you should first know the meaning of royalty. You should first know the meaning of royalty, like what does royalty mean in case you hear it. Yeah, the word royalty, it's like a payment to the owner of the property for using their rights. Like in case someone owns land and you are to use that land for your personal use, okay, for other things, but that land is not yours. So you are supposed to pay the owner, and that money that you pay, it's something like rent. Yeah, it's what we call royalty. So we always have two things in royalty. We have royalty accounts. We have royalty on sale, then royalty on purchase. No, not on purchase, on production. Royalty on production. So it's the owner or the landlord that determines how you're supposed to pay them. Like in case you have, okay, in case there is someone like a musician, they produce their music and then you're supposed to sell their music, but they tell you that every copy that you sell, you are supposed to pay me maybe 10% of it. And that 10% is their royalty. So that 10% is their royalty. Like if you are to pay like every copy that you sell, that's what we call royalty on sale. Every copy that you sell, you are supposed to pay them 10%. And that's what we call royalty on sale. Then for royalty on production, like in case you are using someone's land, maybe land, but that land maybe has, let me say gold. So they tell you that every time you mine from our land, you're supposed to pay us maybe 10%. So that 10% is the royalty, but you pay every time you produce from the land. And that's what we call royalty on production. For royalty on sale, you pay every time you sell. For royalty on production, you pay every time you produce. And that is it. Then Then we have key terms in royalty. We have royalty itself, which is the payment. Then we have what we call minimum rent. We have short working. Then we have recoupment of short working. So recoupment of short working. Okay. These are the main key terms that we are going to be looking at in royalty accounts. Yeah, these are the words that we always use. These are the words that we always use. We have minimum rent, then short workings, and then recoupment of short workings. So for minimum rent, if someone maybe like gives you their music to sell it, they tell you that every year you are supposed to pay me maybe like you are supposed to pay me an amount that is not less than 1 M. Not less than 1 M. So 1 M is the minimum rate. Even though what you made from the sales or from production is less than 1 M, you cannot give them any amount that is less than 1 M. So 1 M is the minimum rate. So minimum rate is that minimum amount that you can give to the landlord. Yeah, it has a specific definition, and I put it in one of the videos. So minimum rent is the minimum amount you can give to the landlord. Yeah. Then we have short workings. So short workings, it's an expense. It's an expense but to the tenant. Here in royalty, we have, are you guys hearing me? Here in royalty, we have two persons. We have the landlord, and then we have the tenant. Like that. So minimum rent is the minimum amount of money that you can give to the landlord. So here we set an example of 1 M as the minimum rent. Then for short workings, it's when you made less money. Maybe out of the copies that you sold, the royalty that you got for the landlord is maybe 800K. So 800K is the actual money that you got from the sale. But the landlord told you, even though you make any amount that is less than 1M, you cannot give him or her money that is less than 1M. So you are supposed to top up on the 800K. You top up the 200K to make 1M, which is the minimum rent. So this 200K that you top up on the actual royalty that you were supposed to give the landlord is what we call the short working. It's what we call the short working. Then recoupment of short workings. Recoupment is the same as recover, like you are recovering. It's the same as recover. So the landlord will give the tenant a rate to recover the short workings that they incurred. They can tell them that in the next period, maybe in case you make the actual rent that you're supposed to give the landlord when it's maybe 1.4, 1.4 in the next period. But they give you a rate to recover the short working that you incurred. Remember here you already incurred a short working of 200K, so they give you a chance to recover that 200K. So in the next period, before giving the landlord the money that you're supposed to give them, you will first deduct a 200K. So this minus 200K, what you get is 1.2. So you give the landlord 1.2. Yeah. So what you've done here is what we call recoupment of short workings. It's like you recover the short workings that you incurred in the previous period. So these are the three things that we shall be looking at. We have short workings, minimum rent, short workings, and then recoupment of short workings. Those are the key terms that are always asked in royalty accounts. So you should be knowing them. Yeah, they can tell you to explain or how do they give short notes about the following: minimum rent, short workings, recoupment of short workings. So that is it. So we are going to have an example. We are going to have an example. Uh, so the example is here. Hope you can see it. It's there. Question 4. There. So here, in this example, they've told us Excellence Extractors Limited acquired rates to remove gravel deposits from the land by Enoch Enterprises. So Excel Extract has acquired rates to remove deposits from the land. This is on production. Excel Extract has acquired. So Excel Extractors is the tenant. Excellent Extractor is the tenant. Then by Enoch Enterprises. So Enoch Enterprises is the landlord. Enoch Enterprises is the landlord. So they are telling us the payment of royalty will be 400 per ton. So the royalty will be 200 per ton. The minimum rent, 2 million. Recoupment of short working will be within the first 3 years. So they are given a rate to recover short workings in the first 3 years. Then during the first 3 years, the following quantities were extracted. So they have given us what was produced. Required, they want us to prepare the following ledger accounts: the royalty payable account, which is the royalty account, then the landlord's account, and the short workings account. So those are the three accounts that they always ask for. They can never ask for anything beyond that. So the first thing we do is to draw the analytical table. The analytical table, we have the years, we have the output, like what was extracted. Then we have the royalty. We have minimum rent. We have short workings. But for short workings, we have the short workings incurred. Well, then what is recovered and what is unrecovered. Then lastly, we have the royalty paid. So they have told us we have 3 years, year one, year two, and year three. Like that. Then for year one, they have given us what was produced. It's there. Here. What was produced that they've given us for the 3 years, the output. For this it is 4,000, then 4,800, then 5,400. This table is going to help us, like it's going to make our work easier when we are preparing the royalty accounts. The reason why we prepare it. I mean, yeah, the reason why we draw it. Then for royalty, here they have told us the payment of a royalty or 400 per ton. They are up here. Yeah. The payment of the royalty of 400 per ton. So like every time they produce, okay, every time they extract 1 ton, they are supposed to pay 400. So the royalty is 400 per ton. So in order for us to get the actual royalty here, the actual royalty that was gotten from extraction, we get this, what was produced times the royalty itself. Let me get my calculator. So we get this 4,000 times 400. So 4,000 times 400. It's 1.6M. So 1.6, 1.6. Then even for the next 400 times 400, 800, 4,800. So 400 times 4, 800. It's 1.92. You can also be doing with me. Yeah. Then 5,400 times 400, which is 2,160, like that. So for minimum rent in the question here, Roman 2, they have told us minimum rent is 2 million. So you are not supposed to give the landlord any amount that is less than 2 million. Yeah. So for the first year, you first record it. It's constant for every year, 2 million, 2 million, 2 million. Then you cannot give the landlord any amount that is less than 2 million, but the actual royalty that was gotten from extraction, it was 1.6. So they will have to add 400K in order for them to make at least the minimum rent. So the short workings that will be incurred in this year will be 400K. So here it will be 400,000. What is recovered? None. Unrecovered, that, the 400,000. So this plus this, the actual royalty plus the short working incurred, we shall get the royalty paid. So the royalty paid will be 2 million. Then, even for the next year, the actual royalty is less than 2 million. So they will have to incur a short working of 80,000 to make it 2 million. So here the short workings incurred will be 80, recovered 0, non-recovered you add this and this, which is 4. Then what will be paid to the landlord will be 2 million. Then in the third year, I don't know if to get this. So in the third year, the actual royalty exceeds the minimum rent. So here no short working will be incurred. So it's 2.160. but they gave the tenant a right to recover the short workings in the first 3 years in case they make any excess, in case the actual royalty exceeds the minimum rent. So here, no short working will be incurred. Instead, we are just going to recover. But when you are recovering, you make sure that you do not go beyond the minimum rate. So this is 2.160. So we are going to recover, like you only take the extra of the minimum rate. I don't know whether you get that. You only take the extra. So the extra is 160. So incurred 0, what will be recovered will be 160, like that. Unrecovered, you get this minus the 160. So 480 minus 160, you get 330. So 330, no, 320 is what is unrecovered. And what will be paid to the landlord is this minus the 160, which is 2N. And that is the analytical table. So it will help us to prepare these accounts, the royalty accounts, the accounts that we asked for. So So first they asked for the royalty payable account. Royalty payable is this one. So the royalty payable account. You debit, then you credit. Since they asked for royalty payable account, it's the same as like when they asked for royalty account, it's the same thing. So since they asked for royalty payable account, we are going to use only this column. So here you write year 1, then you write from, you can either write from extraction or from production. So we shall write from production. You write this, the actual royalty that you got was 1.6. Like that, 1.6. Then this side, you write year 1, 2 to the landlord. So to the landlord with this Enoch Enterprises. So to Enoch, 1.6. And that is how we do it. Then for the next year, you do the same thing. Year 2, from production, which is this 1920, 1920. Then this side you write here to Enoch 1920, like that, 1920. Then for year 3, you do the same thing from production, this to 160. To 160. Then you can say year 3 to 160. And this is the royalty payable account that they asked for. This is how it looks like. Then the next account they asked for is the landlord's account. So I'm going to use this side. The landlord's account. So debit, credit. So here we are going to use these columns. We are going to use this, the royalty payable, then the short workings, and then the royalty that was paid. They are the ones that we shall be using. So we say for year 1, you rate from production. From production, we got this. This 1.6. So from production, 1.6. Then from short workings, how much did we get from short working? This, the 400,000. 400,000. And what was paid to the landlord is 2 million, the total. So 2 million. Then you can receive and rate year 1. This, the total to Enoch, which is 2 million. Then for year 2, you do the same thing from production. What did we get from production? This 1.92. So 1920. Then from short working, we got 80. So 80. And the total is what we pay to the landlord, which is 2M. So year 2 to Eno, which is 2M. Like that. Then we do the same thing for year 3. We say from production, we got 2.16. So it was 2.16. Then to short working, because this time we were just recovering, we were not incurring. We recovered the 160. So 160. So to short workings, then to Enoch. What we paid to Enoch was 2 million because we used the 160 to recover short workings. Yeah. So the total will be 160 to 160. Then we go to the short workings account. Short working is an expense. So it has a normal debit balance. Yeah, so here we only use the short workings column. This is what we use, the short workings account. This. So in the first year, you'll be like year 1, to Enoch. We incur the short working with 400. Then this side, year 1, you put profit or loss. It was an expense in that year. Then for year 2, we had this, sorry, not profit or loss, balance carried down, 400. So for year 2, this will become the opening balance here. So balance brought down 400. Then what was incurred in that year to Enoch? It was 80. So when we had a total of 480. Then year 2, balance carried down, it is 480. Then year 3, you bring this balance here, it becomes the balance brought down, 480. Then this time we recovered from Enoch. So you write from Enoch, we recovered 160. We recovered 160. So this side is 480. And this side, the rest was unrecovered. So you write to profit or loss. To profit or loss account, which is the 320. Total 480. And that is all about royalty. And these are the accounts that they usually ask for. So you first draw this table to help you analyze everything, and after drawing the table, drawing the accounts becomes hope you picked something, and that is all about royalty accounts.